So a number of you guys wanted me to do another comparison video on some of the nickel developers. So in this video, we're gonna compare Talon Metals, Giga Metals, FPX Nickel, and Dumont. Note that Dumont is owned by Wallerton, which is a private resource fund. So by looking at the spreadsheet here, we can see that Talon Metals, Giga Metals, and FPX are in PEA stage. Okay, so that means that they are in a very early stage of development. Where Dumont, they already completed their feasibility study, and then their mine is already permitted, so it's shovel ready. They can start, if they have the funding, they can start construction. So by looking at the 4 projects, we can see that Talon Metals has a smaller operation than the other 3, right? And the other 3 is more a larger scale operation. And if we look at like the mine life, right? So basically, again, this shows this reflects like the size of their operation, right? So, and obviously Talon Metals here is the smallest project here. And this reflected in their initial capex as well, where Talon Metals has a lower initial capex because their project is smaller, right? And the other 3, you can see that their initial capex is north of $1 billion. And if we look at their after-tax NPV, you can see Talon Metals is generating a smaller NPV because of, again, smaller operation. But what interesting to see here is that Giga Metals after-tax NPV. So based on the PEA, this project generates a negative NPV of 443 million. So this number actually looks pretty awful because usually like look at the after-tax internal rate of return. IRR is 4.9%. Like this project is just a bad project, basically, based on the PA. They really need a lot higher nickel price in order for this project to work. And you can see Talon Metals after-tax IRR is 36%, which is very high. The IRR is correlated with the NPV and initial capex. So since it's a smaller operation, their initial capex is small, and that's why you can see a very high after-tax IRR, which is good, right? It's always good to see a high internal rate of return. And for Dumont and FPX Nickel, you can see that their IRR, their after-tax IRR is around 15 to 18%, which is not bad in my opinion, since large-scale nickel project costs a lot to build. The capex is so big, right? If you look at FPX, their initial capex is almost like 1.7 billion, right? So that's why you can see these large-scale nickel project has a low internal rate of return. But I think that if it's around 15 to 20%, it should look attractive. Especially FPX Nickel, it generates after-tax IRR of 18.3%, which is very attractive based on how big the project is. Similar to Dumont, I think that 15.4% is pretty good at current nickel price. And another good thing about Dumont is that they are fully permitted, right? And they completed a feasibility study. So these numbers are more precise, okay? The numbers that generated in the feasibility is more precise than numbers in the PEA, because PEA is preliminary numbers, where the feasibility study give you the accurate, precise numbers. And also that if a major wanted to build a mine or looking for a mine to build in the next 2 years, then Dumont would be the project to go to, because they are fully permitted and just give Dumont advantage, right? The first to market advantage. And since Dumont is owned by private resource fund, but there are 2 ways of investor to have exposure to Dumont. There are 2 royalty companies that own royalty on the Dumont projects. So the 2 company is first one is Nova Royalty, and then the second company is Talon Metals. So both of the company owns some royalties on the projects. So these 2 are the companies that investor could invest in to get exposure to Dumont. And lastly, I just want to talk a little bit about Talon Metals. Talon Metals is in a joint venture deal with Rio Tinto. For those of you who doesn't know, Rio Tinto is the largest resource producers in the world. So they are in a joint venture with Talon Metals in this project. So basically, there's some financial commitments that Talon Metals needs to complete in order to own 60% of the project. So right now they are trying to earn up to 51%. So but at the end of the day, if Talon Metals complete all the capital commitments, they could potentially own 60% of the project, and Rio Tinto owns 40%. So this is interesting because of they are in a partnership with a major producer, right? So in the future, if there are any exploration upside, let's say they can increase their production number, they can increase the size of the projects, that make it very attractive to a major, then Rio Tinto could come in and take over the company.